Hi all, this is Parthiban Anandan. I am going to share few points about traditional investments. There are 9 different types of traditional investments. They are: number 1. Stocks. What is a stock? A stock, also known as equity, is a security that represents the ownership of a fraction of a corporation. This entitles the owner of the stock to a proportion of the corporation's assets and profits equal to how much stock they own. Number 2. Bonds. A bond is a fixed-income investment in which an investor loans money to an entity, corporate or governmental, that borrows the funds for a defined period of time. There are 2 types of bond, they are mutual and corporate bonds. Number 3. Mutual funds. A mutual fund is a professionally managed investment fund that pools money from many investors. Advantage of mutual funds is they provide liquidity and managed by professional investors. The negative side of mutual funds is must pay various fees and expenses. Number 4. Exchange-traded funds, ETFs. An exchange-traded fund is an investment fund traded on stock exchanges. An ETF holds assets such as stocks, commodities, or bonds and generally operates with an arbitrage mechanism designed to keep it trading close to its net asset value. Deviations can occasionally occur. Most ETFs track an index, such as a stock index or bond index. It may be attractive because of their low costs, tax efficiency and stock features. Number 5. The Dow Jones Industrial Average. Publicly owned companies traded on the New York Stock Exchange and NASDAQ. It is one of the oldest single most watched indices in the world. It is an indication of the American economy and it do not include smaller companies. Number 6. The NASDAQ. It is a global electronic marketplace for buying and selling securities, as well as the benchmark index for U.S. technology stocks. It is the second largest exchange in the world by market capitalization. Number 7. The S&P 500. The Standard & Poor's 500, often abbreviated as the S&P 500, or just the S&P, is an American stock market index based on the market capitalizations of 500 large companies, listed in NYSE or NASDAQ. It is much better than the Dow. Number 8. Asset allocation. We have all heard the phrase "don't put all of your eggs in one basket." That is the basic premise of asset allocation. The idea is to balance out risk versus reward by diversifying your investment among different strategies, adjusting the percentage of each assets in an investment portfolio. Number 9. Dollar cost averaging. It is the strategy that involves systematically investing each month to help offset the market risk associated with purchasing variable investments such as stocks, mutual funds or other equity investments. It is not always the most profitable way to invest a large sum of money. All these are traditional ways of investment. Think. 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 Thank you. Signing off, Parthiban Anandan. Have a great day. For any doubts or queries, contact Parthiban Anandan, Financial Service Professional, Golden Capital Services, LLC, 717-884-1389, info.goldencapitalservice@gmail.com.